Welcome back, traders and investors. We have Angie Maguire on the line, and she is Vice President of Grains for Citizens Elevator. She's been working in the grain industry for over 10 years. Angie, how you doing today?
Great. How are you this morning?
We're doing good. Thanks for coming on the
Good.
show. Could you just give us a little bit of like your education and your market background and tell you how you ended up in this field?
Oh, well, actually, I went to school to be a teacher, an English teacher of all things, and graduated with an English degree and ended up in sales not long after college. And I had grown up on a farm. Long story short, I ended up working with a company that was basically an on-farm brokerage firm, meaning we would buy from farmers and sell to the end user and arrange the freight and move the grain off the farm. So I did that for about 7 years before the company I'm with now approached me to take over running the elevator, also the buying and the selling for the elevators. So when I came in, the company I'm with now handled about 3.5 million bushels of grain overall on an annual basis. And this past year, we were just over 11 million. So we've been growing pretty quickly, and I'm the one that handles all of the buying and the selling for the company. So most of my market information has come from pure and total learning, the school of hard knocks, so to speak,
Okay.
and then great role models, good people to work with throughout the industry, and just really have learned on the fly for the most part. So it's been an exciting, great choice in career, I can tell you that much.
Okay, and so with the grain markets, I mean, you have to pay attention to the fundamental analysis, supply
hmm
and demand and whatnot. Could you just go over the fundamentals that you tend to focus on for the grain markets?
Oh yeah. There's certain things I pay the bulk of my attention to the corn, soybean, and wheat markets, because here in Michigan, that's basically what my growers are producing. So that's where the bulk of my grain movement comes from. And in corn, you pay attention to there's three major demand sectors that I watch very closely. There's the export side of things, the feed side of things, and of course the ethanol side of things. So you monitor production, what we're looking at from a carryover perspective, and what we're anticipating the crop size to be, and we offset that with what we anticipate demand to be on the back end. And then in soybeans, very similar. You monitor your production, but you pay attention to exports and crush. What we chew up through soybeans in order to get soybean meal and oil, and then in wheat, there's basically three sectors you could say: the mill, your food wheat, and your export into the global market. And then we pay attention, of course, to the feed wheat side of things, because it'll indicate wheat demand and also indicate perhaps an offset in corn demand. So when it comes down to it, you pay attention to basically, it sounds silly and very rudimentary, but the supply and demand and just the intricacies that go along with that.
Okay, and what about the weather? I mean, is that
Oh, yeah.
I mean, that must must keep you up at night. I mean, obviously you can't follow it like on a I mean, I guess you can follow it on a day-to-day basis, but I'm sure you have to have a little bit longer outlook
Yeah.
to analyze how the whole season is going to go, the planning, the seeding, and also the harvesting. So
hmm
how do you get your information on the weather? How close do you follow it, and what's your time frame?
Oh, yeah. Well, when I was a kid, I wanted to be a meteorologist. I don't know how many 5-year-olds do. I want to be a meteorologist when I grow up. So I'm actually fortunate in the respect that I was a weather nerd and continue to be a weather nerd. We basically, there's a weather market going on 365 days a year. If we're not paying attention to what's happening in the United States in the wintertime, we're paying attention to what's happening in South America. So yeah, I mean, you're watching weather anywhere from you want to pay attention to what rain has fallen in the last 24 hours, what rain you anticipate to fall over the next 24 hours to 5 days. We pay attention to the 6 to 10 day, the 8 to 14 day, the 1 month, the 3 months. I mean, we were discussing El Nino and its impact on the potential production and the implications on global weather back in March. And that is still forecasted not to really show up and impact the agricultural weather of the world until sometime this fall. So we're really watching weather very, very closely. And I always joke the only thing that makes the grain markets even more exciting, because of course supply and demand is can get quite crazy, is you throw in irrational weather and the inability to forecast. And that's been our big struggle lately is weather models have not been in agreement as much as what they've been in the past. So you have one model that comes out at 6 a.m. that shows that we're going to get 1 to 3 inches of rain, and the market trades lower, and then all of a sudden you get a different noon model that comes out that says, no, that rain's not falling here, it's going to fall there, and the market's trading higher. And from that perspective, too, it impacts the cash grain market, because if you're anticipating corn to be harvested and coming into the pipeline and it rains for 3 weeks, it can really impact your short-term supply availability and make things even that much crazier.
And do you, for your weather, I mean, do you follow the Weather Channel? Or I personally like to use NOAA.gov. Where do you get your information from?
All of it. I use AccuWeather. I use, there's several different agricultural weather groups that we can use. The Weather Channel, I'll check that out. Local weather. My favorite is, though, weather.gov. I'm the same way. The NOAA.
The NOAA site, yeah.
Yep. I use that. It's one of the better ones. And then, of course, like I said, there's several other models that we can follow. In my email on a daily basis, I have 3 different weather groups that are sending me a forecast, and we're just looking over to see what it says. And then there's a couple other groups that do global weather forecasts as well. So we're watching to see, is it going to rain in Brazil? Is it going to rain too much, too little? What's going on in China? Things of that nature. So it's really just there's so many groups out there, and we pay attention to all of them, because one may be wrong on one day and it may be right on Thursday. That's just how difficult it seems to have gotten to forecast weather. More tools we have, the stranger it gets, I think.
I think with like the Weather Channel, I think they just keep telling you that it's going to be bad weather, so you like keep tuning in.
Yeah.
And then all of a sudden it's like 50% chance of rain, and like you're standing there and you're looking, there's no chance of rain. Then you go there and they're like, 0% chance of rain. But I like to use the radars from NOAA.com as well when I'm forecasting my football games and sporting events that I attend to. So I agree with you on that. So you do a lot of work with the fundamentals, but we're traders, short-term traders, intermediate traders. We like to look at the charts, and for key support and resistance points. Is that part of your repertoire?
Yes, definitely. I always joke and call myself a backyard technical analyst. I'm not one to sit and discuss the RSI in depth or anything of that nature, but I'm definitely in the grain markets, especially, the psychological levels, the round numbers, your $11, your $10.50, your $12, $4, things of that nature are tend to be somewhat psychological resistance or support levels that we'll see develop. And then, of course, old highs, old lows. If you see something knock on the door 3 times, we love double bottoms or triple tops, and you just kind of watch those numbers and pay attention to them, and gaps. You see gaps on the chart depending on which one you're looking at, and there's a lot of different grain traders and analysts who get really in depth with the charts and look over them really closely and have tens of charts of the same thing, it seems. And for me, I focus on the psychological side of things and how the fundamentals will play into those levels.
Okay, so your main focus is maximizing farm margins, and I'm pulling up the charts here of corn and soybeans, and these are some pretty ugly looking charts here.
Yes, they are.
And I'm not first of all, do you in order to hedge the crops or the supply that you have in the elevators, do you go to the futures markets?
Yes. Yep. We use the futures markets to offset our risk. Anything that we buy, I'm selling into Chicago on paper, and anything that I sell, I'm buying to offset my futures risk. In the grain markets, my biggest risk is the basis risk, what we call the difference between the cash price and the futures market is basis in grain, of course, or in anything that has a cash market to it. And for me, I'm a basis trader. That's where my risk comes in. And we use the futures market to hedge. If I could get all my farmers to hedge, we'd probably have some really happy campers this year. unfortunately, the farmer seems to be the eternal optimist, and we myself, I didn't anticipate prices to move much higher, but the farmer, of course, always did, and we've got some guys that are sitting flat-footed at this point in time, and looking at these market prices that a lot of people said 2 years ago we were never going to see again. So it's been quite interesting to see how that's developed.
So you've been, so obviously you've been out there pounding those futures and shorting them, right? I
Mm-hmm.
mean, based on this
Yeah.
chart, doing a lot more selling than buying. Now,
Mm-hmm.
looking at this corn chart here, it's kind of, it looks like it's kind of finding a support level here. On
Mm-hmm.
the other hand, you could say back in, for the month of June, it had a similar formation, and then I'm not sure at the
Mm-hmm.
beginning of July if it was a bad crop report or what. But that period of consolidation ended up in another
Mm-hmm.
flush to the downside. Here you have
Yeah.
another period of consolidation in the corn market. Is it still a continuation of the trend, just holding in here and another flush down? Or do you think that things like, 2 years ago, people thought, hey, we're never going to see these lower levels in corn? Is it the opposite now that maybe people are
Mm-hmm.
saying, well, we'll never see, 800 again in corn? What,
Yeah.
are you going to be the contrarian here? I know you have to do strictly to hedge what you have in your elevators, but is there, for the corn traders and the corn
Mm-hmm.
farmers out there that didn't hedge their positions with you, do you see
Yeah.
anything changing in the fundamentals?
Yeah, I think so. I think we've overdone the downside. We did see another flush to lower levels at the beginning of July. We did get a surprisingly bearish USDA report come out from a quarterly stock standpoint with corn. Basically, we had more corn on hand than we'd anticipated or traders had imagined. So we saw that, and we saw good pollination weather. Going into July, there'd been a slight prop up to futures as a concern that we could see some issues develop with hot and dry weather perhaps in July during the critical production phase for corn. We didn't. I mean, July weather couldn't have been much more perfect for pollination. So that's why you saw the leg down. And with perfect pollination weather, of course, now we're seeing yield estimates in the mid 170s. The most recent record high that we saw in 2009, which is the closest comparable year we can have from a production standpoint, weather-wise, was 164.7 bushels per acre. Right now, traders are saying 173. So you're looking at almost an additional 8 bushel to the acre in yield estimates to the upside. And I really question how realistic that is with what we're looking at from a production standpoint. A lot of folks will point towards the increase in hybrids and improvement in corn traits. And honestly, for me, we spend more time focusing on growing a good crop during times of stress, not when times are good. So I question how high the top end yield is. Personally, I think we're going to come in closer to a 168 when all is said and done. It may take until January, the January stocks report, before we realize that the corn crop wasn't quite as big as what is being anticipated. But if you look at a 5 bushel to the acre swing on 88 million acres, that's a significant shift in what we're anticipating versus what we may end up having. Not to mention, I think we will see some foreign interest come back in with cheap prices. We're increasing the herd size in livestock, so I think we'll see feed demand start to increase. And ethanol, we're starting to see ethanol plants come back online that have been mothballed due to high corn prices now. So that'll kind of chip in. And to me, I think you'll start to see demand flip things around a little bit, and I think people will kind of come back to reality on what they're anticipating for supply. And realistically, I think $4 futures are a good equilibrium at this point in time, and I think they're livable from the end user standpoint and the producer standpoint. And it would be nice to get the boat to kind of smooth out a little bit after the last 10 years that we've seen in the grain trade.
And do you use the options market at all, or just strictly the
Mm-hmm.
futures? Okay.
Nope, we use options. Yep, I prefer with my growers to be able to sell cash. They can sell a certain value in cash and look to protect the upside with calls, and then that way they know they've locked in a bottom, and they're not going to get anything less than what they've sold their cash grain for, minus the cost of the option, and then they're open to the upside if we do see a rally.
Yes.
That's my preferred approach with my growers on that.
And what percentage of farmers do you think hedge their crops?
It's changing. It's changing and growing pretty rapidly. I have to say, no one hedges 100%, but any level of hedging, I would say probably close to 75% of the farmers that I work with are hedgers or sellers ahead of time.
Okay, and so that's a pretty. See, I mean, is that slowly increasing? Has it been
Mhm.
steady, or because I mean, weren't corn and soybeans weren't they some of the original futures products that were introduced by the
Uh-huh.
Board of Trade?
Yes, yes, there is. So it's been around for a long time, but I can tell you when I first started here just even 10 years ago, there wasn't a lot of deferred sales put on. The market really didn't move a whole lot. You knew that if you saw 270 futures on the December board in July, that was probably going to be the high, and we'd settle back down around 225. So the risk wasn't as great as what it's been over, like I said, the last 10 years when you saw different market movers enter into the market. You saw the ethanol industry really pick up and droughts and things of that nature. Over the last 10 years, the risk to the farmer when it comes to producing and locking in margin has increased exponentially. So I think that's been part of it is these guys realize that they do have the ability. They're one of the few industries in the world that you can guarantee yourself profit if you're smart and pay attention to what your P&L looks like and what you're looking at from a margin structure. So we've seen it a lot more. The farmer is becoming far more advanced than what he ever had before. When I first started trading, it was just a discussion of what was going on in Iowa. Now I have farmers that have traveled into Brazil, into China. I mean, they know more about global production than some market analysts I know. So they're really educating themselves and approaching the market differently than what they had. Some of that is because of the newer generations that we're seeing, the increase in technology, things like that. And some of it, like I said, is purely so they can absorb risk and make sure they're around next year.
Do you do? I mean, obviously you do consulting for people in the area because
Mhm.
they can actually deliver the grain to you, and it's in there, and you're responsible for it. But do you do any international consulting? I mean, obviously they can't deliver the grain to you, but do you deal with other countries as far as helping them hedge their crops and participating in
Yeah.
the markets is pretty much relegated to the local area.
No, I mean, I work with guys abroad. I have some friends that I work with in Argentina and Brazil, Australia, primarily is the areas that I've worked with and discussed with. I don't do a lot from a trading perspective with them, but they do bounce ideas off of me, or we'll have conversations about supply and demand, what their crop looks like, what our crop looks like, and what that could have implication-wise globally. But from the perspective of diving in headfirst with futures with them, no, not yet. I know, like I said, I know they have different groups that they work with, and we work closely on just basically approaching the market from an analysis perspective.
Okay, we've had Angie Maguire on the line. She's Vice President of Grain for Citizens Elevator, helping farmers that want to hedge their crops in the markets and giving us an outlook on corn and soybeans. Angie, thanks a lot for coming on, and we'll keep an eye on this corn chart and see if we can get back to that level you had mentioned.
Yes, thank you for having me. I had a good time.
Okay, thank you.